What's really exciting about investing in cannabis for me is that there are all these different subsectors that you're exposed to. And so we have exposure to real estate, we have exposure to technology, we have exposure to branding, we have exposure to software, we have exposure to obviously just the big vertically integrated folks, and where either some are better at cultivation, some are better at processing, some are better at packaging.
All right, we are back. Tim, this is the real estate podcast, but we talk cannabis, we love business, and we appreciate you coming on our show, man. You're back again, and just want to catch back up. There's a lot going on in cannabis, and so thanks for coming on, man.
Great to be here with you guys. It's always a good time, and I think your approach to looking at trends, themes, and just kind of being guys that are focused on business and a lot of interest in the cannabis sector. Appreciate the energy and what we're doing here.
Love it. It's such a fast-paced, constantly changing industry. And, obviously we're in Texas, and I study these things. I read the reports. I check all the news, and it's fascinating what's happening. And we talked a little bit earlier, which kind of baffles me sometimes, being someone who believes in this for 10, 20, 30 years down the line, is there does seem to be a disconnect in like these companies are coming out and posting amazing earnings. Cookies today announced a deal with TerrAscend in New Jersey. Yep. And it's like, I don't think people understand what's happening from my vantage point. Like, I'm looking at Cookies and I'm like, these guys are unreal, and people don't even know who they are. They're partnering, and they did the deal with Gage in Canada, and like, it's so exciting from where we stand. And if you have time, man, I'd love to hear your thoughts on kind of that. If you feel there's a disconnect between earnings and price, maybe, and also like what you see that's exciting and different. And I mean, we just this week, the other day, MedMen in Africa or Tilray,
Yep.
Just craziness always. And one of my favorites, Acreage, is turning it around, and their earnings are starting to look good. So just love to hear like what you're seeing, what you see in this, what I view as this disconnect with the earnings and the price, and what's going on out there.
Awesome, Matt. Well, one of the things you're kind of making a reference to some of the M&A that's going on in the sector, and where there's going to be consolidation, and where brands who actually have established themselves are also affiliating with some of the bigger companies and extending their reach. So really, these are very positive developments for a sector that. Yeah, I mean, the bottom up story from the companies. If you listen to the second quarter earnings we just got out of the most of the U.S. Multi-state operators, you've got sequential growth quarter over quarter, 10 to 25%. You've got annualized growth anywhere from 50 to 200%, and yet you've got margin progression. So they're more profitable companies as they get bigger. And the disconnect you're referring to is. It wasn't as easy as it seemed in January and February around some of the macro headlines and expectations on federalization. It's no trade is that easy, and despite the fact that this is $100 billion market now, like, this isn't even a question of hey, at some point, folks, this is going to be a big market. Cannabis is a massive market, and it already is a massive market. And yes, the addressable market will continue to grow as I think the medical and adult programs come on state by state. We're waiting for the Lone Star State to get on board, and that's going to be a massive market. But there's an existing market anyway between the adult and the illicit markets. So for folks that are looking at the size, the potential, and where you're going to see some of the biggest consumer products companies in the world come on in or be created here out of this industry now. Like, there's no question in my mind about the raison d'etre, the reason for being. Why are we all here? Why are we all so excited? But that the way the market has moved over the last 3 years has been in fits and starts, and you've seen these moments where the euphoria is beyond euphoria, and when the price action has been absolutely devastating to the downside. The price action for the last 3 to 5 months, I wouldn't say it's devastating. I'd say it's surprising relative to where we see the fundamentals improving out of these companies. And again, we just got through second quarter earnings, and some of the largest companies have not only pointed out where they've got more capacity coming online, where their profitability is improved, but that really where 2022 is going to be a case. By the end of 2022, we could have probably 6 companies, maybe 7 companies that are either right at the doorstep of $1 billion in sales, or those that are well through it. And so we're talking about, emerging leaders of the industry, and so that's part of what's going on. And what's going on in terms of the disconnect with the price action is a function of 2 or 3 things. One, there's just limited amount of capital that's in the industry from the investor pool. So you've been investing in cannabis for some time. I've been investing in cannabis for a long time, and there's a lot of folks that have didn't just wake up and understand that this was a really interesting investment theme. Most big institutional money is still on the sidelines, right? So I run an ETF, ticker CNBS, and while my background is running an institutional hedge fund where my clients were large institutions that were investing and writing big tickets, et cetera. This is an industry where most of the money so far is coming from high net worth retail investors, and there's almost zero institutional follow through. And I think the exciting thing for investors is that now you are investing before that wall of money comes in, and that wall of money will come in, because if you're talking about an industry that has both the size we already talked about, the levels of growth that we've talked about, and I would argue that is going to be an industry that actually some of the biggest institutions that are representing public pension funds and investment groups that also have to think about some of the social responsibility of how they're investing. I'm going to make a claim that investing in cannabis is actually going to be an ESG trade, and which basically is an acronym in the investment world for environmental and social governance, and that actually a lot of institutions tend to vote with their feet, right? They invest in companies that they think are doing the right thing socially. I actually think you're going to see cannabis get that bid from those investors. And that actually, so not only has there been controversy around legalization and the illicit markets, but I actually think cannabis is going to be seen as a socially good wellness kind of a dynamic that from a trading perspective. So that's all I think you're going to even see some of that money. So look, the same money seems to be churning around and around. I think you've got a case where there's clearly been a handful of companies that haven't executed the way maybe the expectations were. I think you've seen profitability in Canada that's been tough to find. You've seen a lot of cash burn. You've seen some cash burn in the U.S. You've seen some companies that were leaders really kind of frustrate people because they haven't been able to keep up in a competitive environment. And then you've seen a handful of companies in the last 9 to 12 months that have gone from 30 million, 20 million in sales to 200 million in sales. I mean, there's been some really incredible success stories, and some of those success stories, you brought up M&A, and you brought up some of the things and what Cookies is doing. Well, I mean, some of the success is that this M&A environment means that there's a lot of companies that have been very acquisitive, and they're executing. They're able to integrate these businesses, and you're starting to now see some of these economies of scale coming through. And I think you're going to see a lot more of that. So you talked about the Tilray deal. Tilray, look, make no mistake, Tilray, which really I consider it the Afria team, and you made reference to that because it was Tilray and Afria that merged. Tilray was, arguably the company that many people first heard about in cannabis 3 or 4 years ago, not only when they listed on the NASDAQ, but when they did a lot of exciting JVs, and it seemed like they were the company that really was going to be the big dog. And frankly, they burned through so much capital. They really didn't have much in the way of cultivation. They really didn't have much of a business. They just signed a bunch of interesting JVs that weren't real deals. Meanwhile, the guys at Afria, at least on a relative basis within Canada, were the guys that were actually really probably the best cultivators, started to show profitability well before anyone in Canada. So anyway, look, they came together, they used the Tilray name. And that's really now, I think, the cultivation and the market leadership you have from Afria with some of those relationships that Tilray has. And it's run by Erwin Simon, who's a CEO that people might know from the U.S. because he built Hain Celestial, and it's a company that I think will be developing brands. And there is an understanding that while much of the cannabis investment story to the first, really for the first 4 or 5 years of its life has been as much about cultivation, growing good flower, growing good product, companies that have perfected all of their not only their cultivation methodology, but the consistency, the safety, the compliance in a new regulatory environment. Those are the ones that really, out of the gates, are the ones that found the most success. There's no question that tomorrow's trade is going to be about finding the companies that really have built brands. And so, and you mentioned cookies. Look, cookies, for folks that are watching the podcast and don't really even know a lot about who Cookies is. Cookies is a company that more or less has built a brand. So what they've done is they've got a charismatic, leader and figure in rapper Burner, who a lot of people know, probably that watch your podcast. Got very involved in the cannabis world and cannabis trade out of San Francisco, working at a medical health clinic. Got very passionate about the story there and where he thought cannabis was changing people's lives. Built a brand. Obviously, he has a big following. Obviously, socially, he's an influencer. And Cookies slowly started building this brand that had some buzz and some hype, and people understood there was an alignment between the product and maybe some social things that I think a lot of people really do believe the cannabis industry is able to do. So meanwhile, Cookies slowly develops. Cookies, now back to the business side of it, Cookies develops with a business plan and a model that's a little different than an Acreage or a GTI, Green Thumb, or a Curaleaf. Cookies decides, hey, look, we're going to go asset light. We have this brand, we have this presence, we have this ethos about who we are and what how we carry ourselves and the products that we want. And we want to go find good grow partners around the country. We want to have a partner like Gage up in Michigan, who we think is one of the best cultivators in the industry, and partner with them to produce our strains in their grow houses, and put them on shelves in their stores and our stores. And that's a model that's worked for Cookies around the country. Today, they announced a deal with TerraSen. TerraSen has been proven to be one of the best growers in the East. And they've decided that they want to have TerraSen grow their strains, be their brand ambassador, and that's a story of how brands are being built. And I think you're going to make there's an argument that you're going to see other people do it in a slightly different way. You're going to see some of the existing players continue to build their own brands because they have their own stores, because they have their own cultivation, they have their own footprint. And the brand is really the next thing to follow. So far in cannabis, you can make an argument that really the brand has been the store. It hasn't necessarily been the flower, the product, that people are going in to buy. And so that's what's really exciting about where the industry is now, because I think we've grown to a place where the industry is still in its early stages. And all you baseball fans, we'll throw this at a bottom of the second metaphor here. So teams have come up to bat, they've taken it, first inning played itself out. Maybe we're settling into a pitcher's duel, maybe it's not, but either way, we're early in the game. And there's going to be positions changes on the field. There's going to be different strategy along the road. And some of this is going to follow very traditional consumer packaged goods, game strategy. And some of it will not. I think the one thing about cannabis we can all agree upon is that between the regulatory framework we live in now, the uncertainty around how that's exactly going to evolve, the dynamics between where the product and the consumption trends in the country are still evolving. Sure, there's hardcore recreational cannabis consumers and medical consumers that have existed. There's a whole different demographic of people that are trying the product and getting in touch with the plant for the first time. And then all of this is happening at a time when software, e-commerce, DTC, direct to consumer, ERP, logistics, procurement, fulfillment. Like these are all terms like you hear about in other industries. You hear about this with Amazon. You hear about this with Nike. You hear about this with Apple. Well, the industry is growing up at a time when brands and companies are becoming more sophisticated by the second because of technology. And that's the other part of the unknown around cannabis, because these companies are being crafted at a time when we're seeing that kind of an evolution from within the industry. So I'll shut up for a second and let you talk.
I love it. Hey, man, I can listen because I follow this space from an outside perspective. I know you're a lot closer to it, but I follow it pretty deeply, and I like hearing this. So it's really cool. Never thought about the ESG play. And from my perspective, I've always believed in this, but I kind of feel like the last quarter from where I'm standing was very important because we knew it was growing, but that kind of solidified it for me. Like everyone posted earnings, and Tilray, for example, like I said, Afria, because I view it as Afria. But I remember when their stock went crazy, nothing to do necessarily with, it was just retail investors. That was the name they knew. And it was at the time valued more than Canopy. And I was like, this is crazy. Now come full circle, Afria teams up, they get the Sweetwater, they get in the US. You're like, man, maybe they are worth more than Canopy eventually. And what's so fascinating to me is all these, from a business, someone who likes business, like looking how Cookies nailed it on the brand. Like I look at their brand and I know their products the best are up there. And I'm like, what did they do that was, because they just built a brand. Like obviously that's a challenge, but they did it. And I don't feel like anyone's even close to that. And there's like all these different strategies that are playing out, like the way that Canopy is going about it, right? And the way that Canopy Rivers is now with, a subsidiary of Scott's Miracle Grow. And like, it's like, there's this massive opportunity, but it, like everything you're saying, it's changing. So nobody knows exactly how to play it. And there's probably hundreds of different ways that are going to pan out, and maybe some that we haven't even seen. And then all these like behind the scene deals and conversations that must be taking place to do a Afria Tilray deal or a Scott's Miracle Grow, or like with Cookies where they're partnered with, Green Thumb and Gage and TerraSen. Like, what is that going to look like? Are they all going to, in my head, like these all going to team up somehow? And I just love it, man. Like I love thinking about what's the next move. The ESG is interesting, like you said, on a business side, but then also the way I view it, like just the plant in general. Like I'm more than the business side. I just want the plant to be out there for people. And I want to have access to quality cannabis and like know what different strains do and how they do it and how much to take. And when you're in Texas, you don't get that, right? But it's obvious that it's coming. And so keep going. Like I love hearing it. And I'm just so intrigued by what's next. Like there's like these power deals in my head that are around the corner. Like, all of a sudden another Constellation type company comes in and puts $4 billion into, Tilray. Who knows? Like, I'm just so intrigued.
Well, they will. I mean, I think that's around the corner. I think there's a limit to what established brands, are going to be able to do in a federally restricted marketplace. They're just not in a position, both from a PR and also a regulatory perspective, to be here. But you can be sure. Look, I think every Fortune 500 company, give or take a handful, have to have some type of a cannabis strategy of some kind. And again, that gets you into a place where what makes cannabis so interesting as an investor and an observer, and people that are watching the industry and thinking about how they want to integrate in the industry, not only as investors, but maybe strategically with what they do and the businesses that they're building. And you guys are in the middle of the real estate world. Obviously, the real estate world is at a very intertwined element of how it's been involved in the early stages. But what's fascinating to me about the cannabis industry, and you've heard me say in the past, I come at this as a guy that was investing in emerging markets. So I was investing in places like Brazil and Russia. I lived in Russia for a couple of years. I was investing in these developing high growth new economies. Kind of sounds like cannabis, right? And demographics, consumption trends. One of the things that I loved about investing in emerging markets was I was an expert in investing in emerging markets, but I was a generalist on what I would be investing in all of those economies, right? Investing in China, you're investing in banks, you're investing in telecom companies, you're investing in resource companies, you're investing in technology companies. Same thing in Brazil, same thing in India. And so when you're investing in cannabis right now, I'm a generalist, right? My ETF is intending to invest in all of these sectors. I want a little exposure to everything. Now, by owning a company like GTI or Trulieve, those are vertically integrated companies, right? Those are companies that are seed to sale, right? That's what people say, and it truly is everything in between. And just on the sales side, as we've talked about, I mean, think about what goes into the sale of a product, and everything from branding, packaging, marketing, distribution, So what's really exciting about investing in cannabis for me is that there are all these different subsectors that you're exposed to. And so we have exposure to real estate, we have exposure to technology, we have exposure to branding, we have exposure to software, we have exposure to obviously just the big vertically integrated folks, and where either some are better at cultivation, some are better at processing, some are better at packaging. So these are the parts of the investment profile that are going to continue to evolve. But yeah, look, I know we don't have a ton of time today, and look forward to coming back and talking more about it, Matt. But the things that are going to be the headlines that you should be expect to see in the next 6 months and certainly the next 2 years are that you're going to see major forays by big strategic players globally to be coming into the sector to cement their place. Constellation Brands has given a little bit of heat for maybe coming in too early, or maybe burning money through canopy growth in some businesses that really weren't worth a whole lot. Some of that's fair, but some of it is like Constellation is who they are by playing the long game and by being a first mover in a lot of the markets they've been in. And again, I see that from what they've done in emerging markets, and where they've been willing to lay foundations and then suddenly be the guys. So for all the people that are tuning in today, if you're looking at cannabis and you're investing in cannabis and you're evaluating where the plant's going, you're also kind of in a leading position, I think.
Yeah, I love it, man. I appreciate it a lot. Real quick, I got one last question, because I've told you this before. I'm big into Acreage, and they've had some challenges, big time. And I've kind of a little bit gotten to know the CFO and the CEO, and it seems like there's a disconnect. I don't know how close you follow them, but it's like there's a new team in there, and they are performing. Like, I was very impressed by their last earnings. Do you have any thoughts on
Yeah, look,
I feel like people wrote them off a little bit.
I think bottom line is Acreage, despite all the fanfare around the canopy deal, has their own footprint and their need to kind of get out there and continue to grow and develop those assets. Acreage has some great assets in some really important states, especially in the limited license states on the East Coast. They had some assets that really weren't that great, and in fact spread themselves too thin, and also may have been an example of a company that got a little bit more interested in having a bigger geographical footprint, because that at one point equated into valuation. And what we've seen is that's not really the case. New management team taken over for a management team before them that at least put a lot of those assets in place, and very much like many other companies in cannabis, 2.0 and 3.0, you continue to see this evolution. Acreage has proven that they are developing some great assets there, and so I think they've also gone from a place where the balance sheet was just significantly impaired, and I think they're in a very different place there. I think they can deal from a position of strength at some point here. The canopy relationship and where that goes upon federalization is only upside, the way I see it. And right now that deal, there may even be an arb in there, and that makes it look kind of interesting. So I agree. It's been a story that's gotten a lot better after some difficult times. And I think inherently, intrinsically, those assets are very interesting.
Yeah, I love it, man. Yeah, there was a time when it was dire, just like MedMen and Ianthus, and you're like, man, are they going down that path? And now it kind of seems they're not, which is cool. But hey, man, greatly appreciate it. I love talking cannabis. I don't have a ton of people I can do it with. I just read the headlines and get on Twitter to see.
Let's do it more often, Matt. Great to be here. Great what you guys are doing and helping to kind of have this conversation out there with people that are really focused on the industry and people maybe they aren't. And I think, hopefully this conversation helps. So we'll see you again soon.
For people trying to get with you, reach out to the ETF. Yeah,
sure. Look, please. CNBS is the ticker, the Amplify Seymour Cannabis ETF. Or, if you want to understand what we're doing in the wealth management side, it's Seymour Asset Management. I'm not a heavy promotion guy, but if people want to, get in touch and talk, go to SeymourAM.com and we'll get back to you and love to, talk to folks out there.
You're the man. Thank you so much for coming.
All right, Matt.
I hope you have a good day.
Thanks, buddy. Take care. Bye.